positioned within the Asian diaspora to work more efficiently and effectively with countries in our region. And the sorts of pronouncements from the government in terms of the Asian century and trying to increase our engagement with Asia, I think are incredibly important and very innovative. And you'll be aware that of the 5 languages that the government is now starting to promote in Australian schools, one of those is Hindi. And recognising that Hindi is an important language for people one of the important languages in our region. Obviously China, Bahasa Indonesia, or the Mandarin and Bahasa Indonesia are another 2 of those. But to engage, to understand a country, one has to be able to speak the language to understand the culture. CPA Australia has been cited in that Asian Century paper because of our activities over the last 60 years or so in terms of educating and exporting what we do as CPA Australia. In our submission to the Asian Century, we didn't talk about dual tax arrangements, we didn't talk about accounting standards. What we talked about was business issues. And to become good business people and to become good accountants, working multilaterally and working across a number of regions, you need to understand the culture of those countries before you can actually do business effectively in those countries. So we're concerned that our members and our members who are working in Australia or working in China or working in India or anywhere in South Asia or East Asia actually understand the culture of those countries and don't try to go into those countries to talk about the regulatory environment, the accounting environment, the tax environment without understanding the culture and what drives those environments in those particular countries. It's very easy to go in and look at a regulation and believe you understand the country. If you don't understand where that regulation came from and what drives that regulation, you're not going to be able to provide the best advice to your clients, to your employer, or to the public. So we've seen that over the last 30 years, the Asia share of world trade has increased significantly. But I think what's lacked in our trade negotiations often is services. And I think we've struggled with things like tariffs and trade barriers around goods and manufactured goods and raw materials. We've overcome a lot of those in our trade negotiations, but we've stalled on services. And services is what impact people sitting in this room. Services are being able to practice your profession in Australia and or in India and or in any other country around the world is made very difficult by a number of the professional bodies, I've got to say, and trying to free that up, trying to provide some mutual recognition of mobility is a challenge that is in front of all of us. And it's a challenge CPA Australia is trying to take and working with others in the region. Next slide. Go back, Ron. When I first started visiting India in the early 90s, I was working for an education company, and we did a pretty robust review at that period of time of whether we would invest our capital in China or whether we would invest our capital in India. I've got to say I don't work for that employer anymore, but the business I set up in New Delhi in 1993 is still a profitable business and is running very well. We made the decision to invest in India because of the transparency. Now, some would argue that it's not always that transparent in India, but at that stage it was far more transparent than China. So I think there is still a challenge for the Indian regulators to continue to make the regulations that pertain to investment in India more transparent, so that people who are coming in from outside of India can understand exactly what the issues are as they try to put foreign direct investment into the country. But nevertheless, at that stage we made a decision to invest in India, and that was a profitable decision for the organisation that I was involved with at that stage. We set up a business in India, in New Delhi. We sought advice from a range of regulators, Reserve Bank, and this was very early in the liberalisation of the Indian economy. It was a terrific experience, and the assistance we got from the Reserve Bank, the assistance we got from what was in the All India Council of Technical Education was quite extraordinary in terms of trying to assist us to set up this business. So I've got to say, as somebody who's done that, it was an enjoyable as well as a profitable experience in moving into India. Next slide. So what we've seen more lately, thanks. What we've seen more lately is the difference in the two major economies in our region. The Chinese economy is really focused on manufactured goods. For Australia, it's been a very important economy in terms of import or buying our raw materials, converting those into finished products and exporting those all over the world. I think where India's lead is going to be is in the services. And we're seeing, and we heard already this morning about the importance of the services industry in India, and I think that's going to be a challenge again for the accounting profession as we move forward. We've heard about the age profile of India's working population. That's quite extraordinary in terms of that young people who are moving into professional work in India. And I know the enthusiasm of the Indians for education and to move through the university sector to become professionals is quite extraordinary, and it will be an advantage for India as you move forward in the years ahead. So we've all talked already about the FTA negotiations between India and Australia. We'll be important trading partners. Trade last year reached $20 billion. It's grown 13% per annum over the last 5 years. I asked this question last night at dinner. Do you know, are people aware of when Australia first started exporting into India? Anyone would like to hazard a guess at when Australia's first exports went into India, what those first exports were? Wool? No.
Wheat?
No. Wheat? No. Education? No. Let me tell you, eucalyptus trees. When the first explorers came to Australia, and at the same time India was being opened up, there was conversations, I understand, in London about the wet areas, if you like, of India and how you could create more arable land in India. And eucalyptus trees were exported out of Australia, obviously via the Commonwealth, to India. So eucalyptus trees, and it was shocked me when I first went to India, and you go around the countryside and here's all these Australian eucalyptus trees. That was Australia's first export, and that was in the early 1800s between Australia and before gold, before wool, before wheat. So there's a trivial pursuit question if you ever get asked one of what that was. From India, we import diamonds and medicaments, that's pharmaceuticals, and a range of beauty and skincare type products. And importantly, and I think this is a real stepping point for a milestone, if you like, in India-Australia relationship, was the opening of the uranium sales to India. That's been, since I was going to India in the early 90s, this issue around uranium sales was something which was seen as a stalemate between Australia and India, and I think that's now opened up. And both governments through the FTA are looking to reach $40 billion in 4 years' time. Indian investment into Australia is running much higher than Australia's investment into India, which is again an interesting point. And the investment into Australia is about $11 billion in 2011. Migration is also an important aspect of the Australia-India relationship. And you'll see there that India formed 15.7% of the total number of migrants coming into Australia. The Indian communities are strong in Sydney, they're strong in Melbourne, and they are an important part of life in Australia. And I'm a migrant. Most of the people sitting in this room who are living in Australia will be migrants, and I think Australia is a remarkably welcoming country, albeit every now and then there are issues, but there are issues with every nationality in Australia every now and then. Australia has had enormous inflows of migrants from the 40s post-war, from Italy, from Greece. Melbourne's the second largest Greek city outside of Greece. So Athens is the largest, Melbourne's the second largest. So that the populations that make up the Australian diaspora are extraordinarily rich, and India is part of that. We've seen a significant amount of outsourcing now into India, and this is around accounting and IT areas. The ANZ Bank, I think that's about 5-6 years have been there, so every mortgage application in the ANZ Bank is now processed in Bangalore. And the comment was made earlier about doing homework. These things are happening. It's quite extraordinary. I was talking with some partners from EY last year who said that they were outsourcing something like 60,000 hours of accounting services from EY Australia to EY in India. So these are great opportunities for the accounting profession, and it is again around mobility and understanding of international qualifications. Education has been an extraordinary relationship between Australia and India in terms of education. I was in India earlier this year talking to some of the education providers in India, and one of the shortages that we have in Australia, as you know, is people who work on the mine sites. So diesel drivers, diesel mechanics, machine operators, big machine operators. And a second challenge was how to attract people from various parts of the world, particularly around Asia, into Australia to study those courses to become qualified to work in the mines in Australia. So rather, an innovative approach taken in India was not to try and attract Indian citizens to Australia to study and then try and get a job, but the mining companies are setting up courses in India to train Indians to operate large machinery, to drive trucks, etc. Assist them getting 4, 5, 7 visas and then bringing them to Australia with the guarantee of a job. So it's some quite innovative approaches now been taken around education. 37,500 students currently studying in Australian universities. India's the second largest source country for students in Australia after China. As I mentioned, there have been some issues. Having been in India a number of times, that the Indian media is voracious when something is seen to go wrong to an Indian citizen outside of India. And unfortunately we did have some incidents in Victoria and Melbourne and in Sydney 4 or 5 years ago, which had an extraordinary impact on the relationship between two very big and great countries. Those small incidents became much bigger in India, I think, than they probably should have been, and unfortunately had an impact on the relationship. I think those have been overcome. I'm sure people here have heard the Commissioner for Police in New South Wales, certainly the Commissioner for Police in Victoria, were very concerned to make sure those isolated incidents didn't become bigger than they should really have been. And I think both countries have worked very hard to try and overcome some of those barriers that have been created by some of those reports. Mutual recognition agreements, and this is where we come to the professional bodies trying to understand what each other does, where their professional programs sit, and how they can work together to ensure the mobility of professionals. So both ourselves and the ICAI have had mutual recognition agreements with the ICAI for some years now, and we see mutual recognition as a way to facilitate that global mobility of accountants. Whether they're working in India or whether they're working in the Gulf or whether they're working in Australia or anywhere else, by being a member of one of our bodies, the ICAI and or CPA Australia and or ICAA, have that mutual recognition where they may seek to work. Now, mutual recognition doesn't necessarily mean that they are able to practice and sign audit papers in those countries, because there are regulators that have a very real and legitimate purpose in ensuring that there are standards that are met outside of the professional standards. But we should be confident as professional bodies, as members of IFAC, that the professional standard that is being met by our various qualifications programs does afford some mutual recognition between our professional bodies and enables that mobility of accountants. So the MRA between the ICAI and CPA Australia, I've listed up there. I think a number of you, and judging by our commentary at dinner last night, have taken advantage of that. This is an agreement which is very live and dynamic. I've got to say, and I know that the ICAI is aware of this, there's been far more members of the ICAI that have moved into CPA Australia and ICAA membership than have gone the other way. I think currently there are 2 members of CPA Australia who've sought to practice in India, and something like 450 have come the other way. But it does enhance the mobility of accountants across our region, and is an important attribute of our relationship between the 2 countries. So what I've tried to do today is give you an understanding of the partnership between Australia and India in terms of trade and understanding the partnership between the ICAI and CPA Australia and the profession here in Australia. Global mobility is important to the profession, it's important to CPA Australia, it's important to you as individuals, but also important to public interest, so we protect public interest in that. And finally, that we try to recognise each other through our various programs and through our operations, and the support that we give through CPA Australia to the ICAI here in Sydney and in Australia, and also ICAA does the same. So thank you for your time, and thank you for the invitation to be here today.
Thank you very much, Rob. That was really interesting and very informative to all our members, I'm sure. I will request Mr. Mahesh Arora and, if possible, Mr. Mehul Somaiya from Austin Brothers to please come on stage and give away a small token of appreciation to Rob. I think Mehul's probably Mahesh, you'll have to do that on your own, right? If you can just walk these steps up, please. Thank you, Rob, and please put your hands together for me. Thank you. Yeah.
Thank you.
Thank you, Rob. Yep. I'm going to leave these.
Thank you.
Thanks. So just on Austin Brothers, one of our sponsors for this event. But before that, just to let you know that we have stalls of all the sponsors just outside the ballroom. There are a few things on offer there, lots of information which they would like to share. So if you could, visit those stalls, that will be really great. Coming back to Austin Brothers. Austin Brothers is a firm of chartered accountants having offices in Sydney CBD and Bondi. The company is managed by two partners, as I mentioned, Mahesh, Mehul, who are chartered accountants and have prior experience with Big Four firms. Partners have rich experience in public accounting practice and have been awarded merits by Chartered Accountants Institute in India as well as Australia. Austin Brothers provides complete and total accounting and compliance solutions to businesses, starting from setting up accounting software systems, internal reporting, controls, to corporate and tax compliance. Recently, they ventured into mortgage advisory and financial planning services. And I've just been informed that they have actually a special offer for this event for the participants today. However, you'll have to collect a voucher from them, and that's available at their store in the southern corner of the hotel. So thanks, Austin Brothers, for supporting the chapter and the event. We'll move on to our next topic of the day. The topic is corporate governance in India and the Satyam turnaround story. Most of you might know this, but still wanted to let you know that Satyam Computer Services scandal was a corporate scandal that occurred in India in 2009, where the chairman confessed that the company's accounts had been falsified. Analysts in India had termed the Satyam scandal India's own Enron. However, on 13th April 2009, via a formal public auction process, 46% stake in Satyam was purchased by Tech Mahindra, and now the company is called Mahindra Satyam. The government of India appointed our next speaker as the director of Satyam, and he has been retained as a director since July 2012. In 2009, he received the Business Leadership Award from NDTV Profit and the 2009 Indian of the Year Award from CNN IBN for his efforts towards reviving Satyam. The main aim of our speaker, or the next speaker, is to motivate and inspire the youth, and he was telling, he just had a quote for the youth, is don't spend your time, invest your time. Also, we got to note that, which probably not many of us would be aware, is that he did this whole Satyam kind of the work on a pro bono basis. So, because it was more to kind of revive the company and it was for the nation. So, without any further ado, please welcome Padma Shri C.A.T.N. Manoharan on stage.
Yeah, thank you. Normally in a conference like this, a speaker gets to speak only once, like a one-day match. But in my case, it turns out to be a test match, so I have come here to play the second innings. As far as Satyam episode is concerned, it is, as Subbu rightly mentioned, analysts called it as Enron of India. In the last one decade, there have been many frauds or scams on the financial front, and more so linkage with the financial statement related frauds. And of late, universities are also, incorporating forensic accounting and auditing as part of their curriculum or syllabi. And there are different kinds of frauds that we have seen in the financial sector. But the prominent one and the Satyam related one is the financial statement related fraud. And in analyzing all these frauds at the global level, this is the summary I have done. There are many factors that contribute on a combined basis or singular basis. But one underlying common factor in all the frauds is the first one, that is the greed. And that is always there. Maybe it takes different shapes or different forms of greed, but that factor has been supplemented by many of the other factors, including audit failures, with which our profession is concerned about. And starting from 2000 onwards, if you take a trace of major frauds, you get across to these frauds. In fact, Enron resulted in the Sarbanes-Oxley Act getting enacted in 2001-2, and subsequently it was diluted to some extent because cost of compliance was phenomenally going up, and many corporations were getting listed elsewhere and not in New York. So all that happened, WorldCom, Xerox, and the last one was Madoff, which was 65 billion fraud. And Satyam is first of its kind in terms of the financial statement related fraud that surfaced. If you look at the basic facts, it is a company that originated in the early 80s, but the growth was phenomenal during the last one decade, that is from 2000 onwards. And the top line was to the tune of $2 billion US, and 53,000 employees, 66 countries operation, and out of Fortune 500 companies, 185 companies were customers of Satyam. And it got listed not only in India but also in the rest of the world in few other jurisdictions, including US. And on 7th of January, the corporate India woke up to a shocking revelation by the chairman, saying he manipulated the accounts, and whenever any such scam surfaced, there used to be two consequences or reactions from the stock market. One is the share prices plummet. So in Satyam's case, the share prices which were quoted once at 300, 400, 200 came down overnight to 6 rupees. And the volume of sales, the second one indicates what was moderately traded. Suddenly after the confession, the volume of sales, panic selling by the shareholders, because they wanted to minimize their losses before the share price hit the rock bottom. So that happened. And the substance of the confession was that falsification of billing to the customers, just to boost up the top line. Now once you fictitiously do the billing, you have to show it as collected. And for that, bank statements were forged, or rather fictitiously created. And then if you show something as having been collected, you must either spend it or invest it. So such a huge amount could not be shown as spent, so it was shown as invested in bank deposits. Now to evidence that, bogus fixed deposit receipts were fabricated, were printed. And once you show bogus fixed deposits, you should also offer that interest income for tax purposes. That was also offered. So the story goes on like this. That's how it all happened. And what the promoter attempted to do was to clean up this at one stage. He wanted to merge this Satyam with Matas, which is owned by the sons. Matas, if you reverse Satyam alphabetically, it is Matas. So the sons company, which is an infrastructure or a real estate company with a lot of land bank. So he thought, all this cash, fictitious cash, can be shown as paid to sons company. Land will replace the deposits, and land can be revalued, and the balance sheet can be cleaned up. So that's how the strategy was attempted, but that was voted down by the shareholders, so it could not go through. Merger was stopped. And people wonder even today, why confession? So long nobody found it out. So why not you could have continued? But the global financial crisis preceded by subprime crisis of US had its own impact in the inflow of orders to India also on the IT sector. So the orders were dwindling, liquidity crisis was there in IT companies, and even Satyam had this problem of the paying the salaries or pay bills. And that's why you can see, in the confession letter there is one sentence which says, it was like riding a tiger, not knowing how to get off without being eaten. Because you must have embarked upon the tiger when the shortfall or the gap was very small. And over a period of 6 years, the volume increased. The volume of fudging the accounts increased, and the gap between the real profit and the fictitious profit was phenomenal. 3% was the real profit, but what was projected to the outside world was 24%. So every year the reserves were getting swelling because of this fictitious profits. Now coming to the consequences, worst affected are these segments of stakeholders. First, the investors felt deceived, and class action suits were filed in US. The employees, they were the most affected, I would say, having seen them in close quarters during the revival process. I'll explain how they got affected later. Customers felt that continuity of the project is at stake, and there could be a cost overrun if they had to migrate to other service providers. Bankers, though Satyam did not have huge borrowals, even the guarantees, financial exposure, non-financial exposure was there for certain banks. So they were worried about recovery of the funds. Above all, the government felt this can damage the reputation of India for attracting global investment. So therefore, something had to be done. When Lehman Brothers, ICAI-AU, collapsed in US, and as I was mentioning, even many of the American banks needed a bailout plan. That's what was resorted to in US. Law was enacted to pump in taxpayers' money to bail out many of those companies. But in India, that was not considered as one of the modes. Alternative was to allow the market forces to decide the destiny of the company. So let it collapse like AAG or Lehman Brothers. But the government of India felt something else can be tried. So that's why they dissolved the then existed board. They constituted 6-member board, including me, and we were given free hand to run the company, to manage the show. The mandate given to us was protect the interest of the investors, employees, customers, and segregate the good from the bad. The company is good, the assets are good, business is good, and all the stakeholders are good. So only the promoters are bad. So therefore, promoters will be taken care by the investigation agencies. You concentrate on reviving the good components of Satyam. That's how we started working. And as a finance professional, I was given the responsibility of restoring stability in terms of liquidity. That was the top priority, because financial stability was like oxygen supply to Satya. And therefore, we focused on that because by mid-January, I took stock of the financial needs of this company. By end of January, we needed 100, those days it was 50 rupees per US dollar. So 100 million, US dollars was required. In other words, in Indian rupees, 500 crores was the monthly salary bill of these 53,000 employees. So that had to be, but there was no money in the kitty. There